Well, Eric Clark, AE Info. Eric Clark from Flagstar TPO, bringing you some information you can use. Want to make sure you're checking out e-closings, hybrid closes. We'll print all the docs electronically to delivered to the customer, where he can view them, sign them prior to closing, and then just meet briefly with the notary for a few minutes to execute. Very modern, very sleek closing. Think about putting it into your workflows, save title company your money, increase revenues. We're here to keep you informed and aware of what's going on. One piece of news that is so recent, it hasn't been published yet. New loan says 726 200 will be in effect shortly, and we will be getting rid of any price adjustments that we had at that exceeding 700 to 715 loan amounts. Now going to 76 200, and pricing being a quarter better there. So that's good news. Other good news is government overlays continue to get repealed and peeled off. We used to require one of the borrowers on a veteran loan to have a FICO score. No longer the case now. We will do manual underwrites, and we'll even do them to the 647 200 loan amount. That is the VA loan limit. We do loans larger than that, up to 4 million, zero down. Learn more about how to do that by getting a hold of me or doing the research. Government overlays. Also, just to remind you, we are doing manual underwrites. Obviously, not no FICOs on the VAs now. We've been doing that for FHA and USDAs. That ideally, you still have to give 3 alternative trade lines, and keep in mind a monthly subscriptions does not cut it. So Spotify is out. That Netflix account is out. But you know, we're getting very close to just straight FHA HUD advisement on these kind of loans. Matter of fact, we're eligible for manual underwrites. FHA, VA, USDA used to be 1 and 2 units. Now we've added 3 and 4 units, even for the manuals, to our government FHA loans. So more improvements there. Fannie Mae, Freddie Mac, they have some pretty cool options too. Freddie Mac is saying, hey, they don't even have a FICO requirement whatsoever. Just get an LPA, loan prospector advisor, accept response, and you are going to be eligible for that loan. Now, keep in mind, you can't get PMI that easily without a score at all. In fact, the lowest I've seen is 600 FICOs. So you've got to have some kind of score to base that on. And so above 80, again, I found an MI company that will do 600. So at Flagstar, you could get a file that averaged. So look at Fannie Mae, the way they look at it. They're averaging. They need a 620, but they'll allow, for instance, a 600 and a 640. That averages the 620, and you would be eligible for a conforming loan. And because the low score is 600, you'd be able to go agency and get mortgage insurance up to possibly 97 LTV if the program got the approved eligible. So, some examples of averaging. Obviously, take the low of the mid of 1 or low of 2. Throw it into that's one person's average, the other person's mid. Do the math by 2, and there's your average score. We're going to continue to grow on options, get thicker and deeper with options. We're doing the HELOC. You in Michigan should have your second mortgage license so you can get into some of these second mortgages, help people tap their equity. We've got doctor loans that price just as well as our really well-priced jumbo ARM. However, it goes to higher LTVs. We'll talk about that in one moment here. And we're doing advantage non-QM, whether you need credit flexibility or you need income flexibility. We've got a 12-month asset reduction or 10-year asset depletion income qualifying, or we have bank statement qualifying. And we'll talk about how that's improved too. And there's, that obviously leaves a little bit to be learned, but dig into our guidelines. You go to seller's guide, non-agency products, non-agency jumbo products would be there. And we've got a lot of different stuff, jumbo enhanced. That's a little out of date right now. It's a fixed rate. Not that attractive in fixed rate. It's an arm market on these big loans. So our jumbo 5, 6, 7, 6, 10, 6 is a star player as far as interest rate. Um, but let's talk about that. Um, the jumbo, it goes out as high as $4 million, up to 89.99 certain dollar amounts. Very aggressive program, great price. So price your jumbo arms with us for sure. But those are pretty cushy scenarios, pretty comfy price, little lower loan to values. But we've got a doctor loan that'll price basically the exact same as that, but goes to $1,500,000. Just has to exceed 80. Got to be in the MI territory. That's the big benefit of this doctor loan, right? And it goes 97 to 850, 95 to $1 million, 90% to $1,500,000. Um, it's pretty much just what the doctor ordered, right? There's a lot of medical professionals that are smart with their money. Why use somebody else's money? Let's put the minimum down. Use other people's money. OPM, other people's money. Price quoted, must make sure that you're checking for over 80 LTV on the program. Say that it's an ARM and say that there is mortgage insurance, and you'll come up with the doctor loan program, which 97 LTVs goes to 850, as mentioned, 95s to $1 million, 90 to $1.5 million. Very good flexible credit accepting. And the other key factor is that, again, it can go down to smaller loan sizes, right? So the fact that this jumbo loan does low down payment and prices just as well as the other conforming ones that require, or standard jumbos that require more down payment. There's also the capability of nurse practitioners, physician assistants, registered nurses. I guess that's a kind of an implication that maybe not as high as earnings and not really going out and buying these massive homes with massive PITI. But the fact that this goes all the way down to any loan size, as long as it's over 80.01 in the LTV category, makes it very interesting. And it prices just as well as our well-priced jumbo arms. So not everybody's in a cushy situation, right? So that's where we came up with our non-QM, which anything that starts with the phrase advantage at this point um, should be indicating a non-QM. And the reasons they're non-qualified is they either push higher DTIs than is normally done on a qualified mortgage, um, or there's more flexibility in the credit. So the advantage itself is more about credit kindness, and it is accepting of 12 months on a bankruptcy, up to 60-day lates on your mortgage. And instantly, if you had a foreclosure and completed, we can move on to our new home and fund without a seasoning period. So flexibility and credit, 600 FICOs into the multi-million-dollar range. But again, a key point is that it can go as low as 100,000. So you got credit questionable people. Maybe you need to look at the advantage, even if it is a conforming loan size. Then we got qualifying issues, right? Well, before I jump into the advantage bank statement that we actually have and is very useful, if you've known bank statement loans, it's today's version of stated income. You're not paying Uncle Sam, but you're showing that you got your deposits. I got an option there. But before I go there, I want you to remember that the advantage also has a 10-year depletion of assets. So we got to have a large scale of assets, 6 to 12 months of reserves on this particular product anyway. Then you can divide that by 10 years and come up with an income for the file. The other part, the advantage bank statement loan, goes down to 150, And it's just what it says, a bank statement loan. If it's personal statements that you're using, you should be able to use 100% of deposits that are attributed to the business. But if you're giving me business bank statements, then we usually want to run a 50% criteria. I just talked about this kind of in a memo that came out. Again, let's slow back down. The Advantage bank statement is a loan where I will analyze your bank statements, utilize that kind of income qualifying, pay the mortgage, a high mortgage rate, a little higher, no mortgage insurance on these, but not Uncle Sam, right? That's the reason people go the bank statement loan. Then again, there's the Advantage non-QM, which is more about the credit, shortened term of waiting on the credit. So back to these bank statements, there was an update that just came out. We backed off. It was 70% expense ratio. We're backed that down to automatically a 50% expense ratio when you're giving me business bank statements. Again, if it were giving me personals, I'm going to use 100% of what's attributed to the business as deposits into the personal bank account. But when you give me business bank statements, I'm going to have some kind of some debt to income ratio for your company. So we will start at 50%, and that's only on loans. Any loan with an LTV greater than 85 will be required to max 50% expense ratio. Of course, you got to be 25%, and you have an owner, or at the very least, right? We're allowing 20% expense factors eligible up to 85 LTV. If you're the sole operator of the business and you're in kind of a business that has no cost of goods, no heavy equipment, machinery, etc., and there's no office rent, you have that type of situation, then you'd be eligible to 85 using 20% cost on those business returns. The third option would be to drop to 15% cost basis. So only you're allowed to use 85% of what's in the business deposits. If you're similarly in one of these low-cost businesses and you have a CPA, or you have a CPA that writes the letter that indicates they're filed their tax returns for you, they present an expense formula sheet, and we could accept that up to 85%, but that is only to 80 LTV. So keep in mind, those are good options, but you got to split the hairs here. Again, that's part of the learning of the bank statement loan. And if you need to learn more, not only do I have these classes, and you can find me on YouTube, Eric Clark AE Info, but you can also learn more about these products that remind you, again, go down to conforming loan sizes, 100,000 for the credit bent one, the bank statement's 151, and the doctor loan to any size as long as it's over 80.01. But if you want to learn more about these things, you go to Flagstar Training. Our Star Academy is always there for you. You'd pump in your search for your learning interest, and that kind of information will come up for you. So you can put in HELOC, construction, renovation, bank statements, FHA 101, 102, VA, learn the basics. All great learning points. Learn more to do more. And as always, think about joining me. Remember too, we've talked about some funky different ways to use assets for income, whether it's the 10-year depletion on the Advantage program or using bank statements in the bank statement loan. But conforming has old-fashioned assets as income in the asset depletion program. Fannie Mae takes the amortization of the actual loan amount, divides it into the asset to come up with its calculations. Max is usually about 80 LTV. Freddie Mac also 80, but it allows you to do 240. No matter what your amortization of your mortgage is, you can divide the assets by 240 months to come up with your qualifying income calculation. Don't forget our HELOCs out there, state of Michigan. You need a license. Why don't you make a resolution to do one and get one by New Year? It only costs you about $600 to get a license. Your first loan would pretty much pay for that. $50,000 is the minimum draw amount, line amount, and you must draw up that full $50,000 at closing, or 50% of a larger line. So if it was $500,000 line, you'd need to draw $250 at closing. You could pay back after initial draw, but you'd have to at closing take that initial money. Compensation would be 1% of the line requested amount with a minimum of $500 and a maximum of $1,250. Pretty good pay for the amount of work, very reduced kind of documentation. You're using our title provider, and hopefully in most cases, unless it's over 250 in loan size or unique property, something which had major renovations, would maybe need a full-blown appraisal, but most are $125 to $95 type of collateral evaluations. You pay title search, a recording fee, and that's about it. Pretty low cost situation for the borrower to tap equity. And when you're looking at these loans, when you go to request a closing docs, make sure you indicate that you want an e-closing and that you've confirmed with the borrower they understand that a e-closing is going to get their documents sent to them prior to. They can look through it, ask questions. Day of close, they can sign before they take the shower in the morning in their PJs. Go meet the notary to sign the remaining documents, shake realtor's hands, and move on. Test try it with a HELOC, but I highly suggest you get into the 21st century and use that all the time on the majority of products that we have that make it and eligible to do. Flagstar is growing bigger. So if you're growing, we'll grow along with you. We've got warehousing. We've got these offbeat programs, that need a little learning. So check out that Flagstar training, the Star Academy. But also, you've maybe heard that the merger was approved and going to close. We are joining forces with NYCB, and no change really across the board, except the way you say our name would be Flagstar Bank FSB will now be Flagstar Bank NA, just the national bank. And that's it. You won't notice any changes in personnel, programs, paperwork, anything. No need to recertify anything until your annual renewal that we always do. But keep looking at our products and learning more to do more. Thanks for your time, as always. Get a hold of me if you need me. Eric Clark, AE Info, also found on the social. So thanks for your business. Take care.